CardinalStone, they've put out their latest report. Indicators align for sustained macro gains. That sounds pretty positive. There is a lot to get into. I really enjoyed reading this report. Incredibly informative. We are happy to have their lead economist and fixed income strategist at CardinalStone, Olaolu Boboye, to join us to discuss. Happy New Year, sir.
Thank you so much.
Good to see you again. Have a seat. Let's get into this report. I really enjoyed reading this. So, going by the title, it suggests that there are, good things to come. Tell us about the title. What's informing that? What are you essentially saying about where the country is going as far as the economy is concerned?
So we strongly believe that Nigeria is currently in a stable environment. And if you do an economic heat map using different scoring method, Nigeria at the current state looks so much like 2019, where we had very good stability. The last time we had that kind of stability was in 2014. So we are very much optimistic on the dynamics that we have at the moment.
Great. Now, the next charts, I really like this, right? You've got NGX 30 companies, and you're essentially, you could overlay GDP on this chart, right? Because you can see this is their net income in blue, profit margins in light purple, I guess. And I mean, look at 2020 when COVID struck and so on and so forth. So talk to us about this is 2023 from the reforms, and we know how they hit hard. This spike to the up to the right, what's that saying? So
what this chart is simply telling us is that it mirrors the economy. So what we tried to do was to disintegrate the overall economy into major components, right? We have the businesses, we have individuals, and then we have the overall, we have the government, right? From the business perspective, what we're saying is that after the struggle that we had in 2023, where FX-induced struggles, and as well as the reform struggles that we saw from the government, affected things. What we are having now is that there is a massive improvement currently ongoing. And we used this profitability as a gauge to see how businesses are faring. And contrary to some belief that people have put out there, that the major driver of this sharp improvement is a function of price, we think that there is also a component of volumes, because the impact of volumes will show more on the GDP numbers rather than price. And what we're seeing from the volume perspective is that businesses are growing volumes. If you go to the oil palm sector, if you go to cement, even though it's more of price, if you go to the consumer goods space, FMCGs, they are growing volumes because they are becoming much more confident in the economic narrative. So this is a pointer to us that we are moving towards a level where businesses are excited. Take, for example, PZ that wanted to leave the economy, change their mind. And we believe that other guys too will still change their mind. Perhaps people that have left will come back. Our engagement with foreign investors shows that they are even much more optimistic than we Nigerians because of what they are seeing.
Yeah, fantastic. Now, you also included the Central Bank of Nigeria's survey, and in that survey, it did show that corporates expanded their capacity in 2025. So you've got, and for I think almost, except maybe for manufacturing, that's just right there. Yeah. But mining, quarrying, agriculture, construction, market services, and then non-market services. Is energy part of this conversation in terms of the expansion that we're looking at? Because I assume that a lot of these industries are in the band A segment. Talk to us. Is energy part of this conversation or trigger for this expansion?
So interestingly, when we try to look at a few number of companies, especially those that are listed on the Nigerian Stock Exchange, what we're saying is that many of them are switching to alternative fuel. Right, because if you look at the contribution of energy costs to the total costs profile of businesses, for some it's over 10%, for some it's slightly above 10%. But what we're saying is that we're seeing a move to more alternative sources, right? Dangote, for example, brought in some CNG vehicles, brought in some CNG equipment, just in a bid to reduce energy. So clearly, energy might be part of it, but we think it's largely a function of the improving macroeconomic dynamics, right? They are building up capacity because consumer wallet is improving. So if you go back to, I was telling someone growing up, right? I grew up in an environment where it was a middle-class environment to lower than middle class. One thing was available. People had food. Right, consumer wallet was not that pressured compared to now. But what we're saying is that consumer wallet that was really strained is kind of easing. gradually. And I think that businesses are strategically positioning themselves for that easing in consumer wallets to take advantage of demand from them or demand from other corporates or business or the government. So it's a function of the anticipated demand and the improving macroeconomic condition largely.
I am glad you mentioned you growing up in a middle-class environment where everybody had food because, well, we're going to get to food. This is part of issues with the challenges that people have. And this is again from your report. Insecurity and insufficient power are the top two concerns for Nigerian businesses per this list. And you got high multiple tax. We'll get to tax reform in a second, elevated interest rates, financial problems. So, I mean, I know the president had a declaration the other day after one deadly attack in the north. Talk to us about the need to address those top two.
So clearly, the biggest impediment to the current economic narrative is insecurity, because if you look at it, insecurity from the perception of the international community, from availability and supply of food down to the economic impact, right? You know that insecurity has been pretty much huge. And it's expected for businesses to clamor, because if you go to regions where you have predominant insecurity issues, businesses are struggling, right, to pretty much survive in those spaces. Many of them are exiting and going to other regions where things are pretty much calm. So we believe that government needs to do more, and we like the fact that, okay, we're beginning to see some shakeups in the security ministry. You know, that is bringing up a bit of confidence. We think that government needs to do more in a bit to checkmate insecurity issues, to bring in confidence in the market. And on insufficient power, like I mentioned, businesses are looking for alternative sources of energy, because it's pretty much expensive for them to depend on the current ones that we have, gas, electricity from the government. It's quite expensive, right? They're looking for alternative sources, looking for internal generations, you know, just in a bit to ease off that pressure on them.
All right. Now, let's talk about number three. And I know that because tax reform just, went into effect, right, here in Nigeria. Yeah. So, and so it can be understood. I mean, yeah, people have been talking a lot about higher multiple taxes. What do you think that the promises that have been made, and we've talked about taxes ad nauseum now with everything that's been going on, will be able to, will be kept? The promises that the authorities have said we will see with these tax reforms.
So I'm a bit optimistic that a year or 2 years from now, taxes will be off this list.
Okay.
Right? I believe that the structure of the tax that they've been, that have been designed is to help those at the bottom of the pyramid. Yeah. People that have been struggling, is to ease the pressure of them. And then secondly is to tax those that should be taxed but have been avoiding or evading taxes over the years. The only thing that we need the government to do is to stay committed to what has been designed, right? Because we've been hearing a bit of discrepancies between the actual report and the things that were proposed. All right, we think that sticking to what was proposed will be very significant in bringing that change. And we think that governments will do the implementation progressively, right? Because some of those implementation, the markets was unclear, especially the CGT. That led to a bit of sell-offs at a point last year. But we think that once it's properly implemented and there is proper communication, which we think that Taiwo has been doing great in terms of communication. When we see more communication and more clarity on that, we think that it's going to be a good one on the long run.
All right. Now, number 5 is financial problems. And that takes me into the food example you were talking about earlier, growing up, where people always had food. When we look at another chart you have on food insecurity, we're looking at about an estimated, 30 million people that are food insecure. So, how can that be? Now, is that a price thing or is that a supply thing? Because, if you, I assume increase the supply of food, prices can rise. Inflation has been moderating. We should point that out. So, what do we do about this high number of folks that are food insecure?
So, first, if you look at that chart, we had about 33 to 34 million Nigerians that had struggled to get adequate food,
right,
as of 2024. 2025, that number has moderated modestly, right? Even though we still have quite a number of Nigerians that are expected to face food insecurity this year or last year into this year. The interesting thing about it is that the major reason for this struggle is because there is availability concern and there's affordability concern.
Right.
It's availability because there is struggle with insecurity. And that's where perhaps maybe state policing will come in to help ease the problem. I know most of the concern that people are having is the ability of states to be able to finance, to meet up with the costs of having state policing. But we think that if you look at it from tackling the insecurity perspective and the overall benefit, it outweighs the costs on the state government. So we think, state policing coming to ease insecurity will be good to, bring about improved availability. Then from the affordability perspective, inflation is already moderating. Food prices are moderating. If you go to the market a year and a half ago, a big basket of tomatoes was selling for over 120 to 130,000 naira. At the moment, people are buying it for around 60, and that's because it's festive period. After festive period, maybe you'll be getting it lower than that. So we think that this easing prices of food will be very good in reducing this number, maybe below 25 this year, and over time, we'll see it decrease materially.
Yeah, I mean, there is this, you can notice there's a noticeable decrease on 2024 going into 2025. Back to this insecurity matter, and you mentioning state police. And again, you guys, it was really good report. You touched on so many things. Excellent. Police to population ratio. For our viewers, you can see Nigeria there in red, and the United Nations benchmark. So we do not have enough police. I mean, even doctors. I mean, pick your sector. But what about the ability of, and I know we're going to get to the state finances. Excellent charts, you guys, on the state finances. But the ability of the states, outside of a handful of them, your Lagos, Rivers, and so on, FCT, to be able to manage that additional wage bill to pay for state police. Is that going to be possible? That's always what I come up with whenever I discuss this matter.
Yes. So first, that concern is very valid. Because take, for example, at the moment, we have quite a number of states who are yet to implement the minimum wage.
Right.
Many of them are still sticking to the old minimum wage, and that's because of their finances. But notwithstanding, we think that the improved FAC numbers that we're seeing, improved FAC allocation to the states, is a good one, right? And we think that it should give state government the leeway to be able to take on this cost. Already, some states have some structure, security personnel, like the Amotekun and others. They are already doing it, because if you place it on a balance, solving the insecurity issues that has plagued the country since 2009 and the costs on government financing, I think that solving the problem of insecurity will place more, we should place more weight on it. If you solve the insecurity, you're able to attract investors to your region, you're able to grow your IGR, and then the overall impact is positive.
Yeah.
So I think that immediately, at the moment, a few number of them can. Those that can, they can depend on the FAC to be able to meet up these expenses, but the long-run benefits, would drive investor and ease pressure on the fiscal side of things.
Speaking of easing pressure on the fiscal, let's get to FAC, the Federal Accounts Allocation Committee, the money that is disbursed. Now, so we've got a number of charts, right? You're essentially showing, and I see, higher non-oil revenue than oil and gas revenue in terms of the increase of 8-month period, 2020, 2020, 2025. So let's talk about the health of these states. So for anyone that's wondering now, that says, okay, Olaolu, how is it that what was the trigger? What was the turnaround that has led to the state's fiscal health looking better? So
it's good to provide a bit of context. Number one, states are cutting down on their debt levels at the moment. Number two, states are growing capex. That was last year. And that's pretty much the first time they've done that in so many years. Yeah. Right? It started from 2024 and down to 25. Yeah. And we think that will progress going into 2026. One, FAC has been improving, right? And that has supported state governments. Secondly, we already know reason why FAC has been improving. That's because of the old reforms that government have done. It has ballooned the fact numbers, as state government have benefited from it. Secondly is the fact that we like that state government are now being more aggressive on capex. Last year was perhaps the most interesting year where we saw a lot of state governments embark on airport projects, Ogun State and a few other states, right? And we like the fact that they are cutting out debts. So them cutting down on debt is good for their credit rating. It's good for their ability to take on more debt when they need it at a cheaper cost, especially given the expectation for interest rates to moderate, MPR to moderate this year, right? And going into 2027, it should moderate further. That will give them the leeway to be able to take up cheaper debt, maybe to pay up their expensive debt or to finance projects. So it's a good one that the FAC inflows is benefiting their performances and then supporting growth. The only thing that we think that state government needs to do more, they need to grow their IGR. So when we check the contribution of the contribution of their revenue, it's still largely skewed towards FAC. FAC, you need more from your own states to drive it. If IGR is accounting for over 50 to 60% of their entire revenue, that will be a good one. It's more predictable and more stable than FAC.
Gotcha. Now, so I look, and I love conversations on the states because I just feel it's a more decentralized approach and an analysis to look at them. So if the states are doing better, now coming to the budget, which President Tinubu has put forward for 2026, and I think that's deficit there, which is the difference between the revenue and the expenditure, is 13 trillion. You're forecasting 15. I've noticed the number of other houses that are, in this higher double-digit region. So talk to us about this deficit. If the states are doing better, is this still a worry?
So government is looking, the deficit from the government numbers is 23 trillion. That's the highest on record.
23, yeah?
23 trillion.
Okay, sorry, I think I said 13, but go ahead.
And that's the highest on record.
Yeah.
So we think that it will be smaller.
Okay.
So if you look at what happened last year, we saw capex from government-owned agencies, about 70% of their capex was moved into 2026 budget. We think that because of that elevated deficit and financing to finance it, government might have to push some of this capex of 2026 into 2027 or cut down on some of those capex. That was what fed into our own assumptions. Okay. And that was why we think that it will be lower than what government is estimating, right? And the reason why this deficit is pretty much huge is because we need improved revenue mobilization. If you read the earlier parts of the fiscal parts of the report, we had looked at how error forecast, that is how Nigeria has missed its revenue projections in the last few years.
Yeah.
At the point, it's even about 2% of GDP, in excess of 2% of GDP in terms of deviation. And that's largely because it's oil skewed. It's about 70%, it stems from oil, 70% stemming from oil. So we think if we can have improved revenue mobilization from the non-oil segments, right, is more predictable, is more localized, right? Oil is dependent on external factors, is more localized, and that can help to put to ease off things. So the 15 trillion that we are estimating, 15.7 trillion, if they do maybe about 60 to 65% from the local market, that means they'll be doing roughly about $11 billion. They will need to borrow close to $1 trillion naira every month from the local markets. We think that this will most likely keep fixed income yield, especially from the bond, elevated in the course of the year, maybe about 18% for the rest of the year. While for NT bills, it will most likely stay at end the year at around 18-19% levels by the end of the year, despite the fact that we're expecting NPR to cut and inflation to also moderate.
All right. There's so much to discuss. We only got about 2 or 3 minutes to go. Very quickly, it's a pre-election year. Next year is just going to be Nollywood or Hollywood, right? All types of things happening. In your report, you say that you don't think that electioneering and election spending will impact inflation. So talk to us about that really quickly.
Yes. So before I go into that, typically people just assume that once it's pre-election year or it's election period, then crisis is there. We try to check how the historical pattern has been. What we are saying is that the FX market typically will react more to how the economy behaves in the prior years or how economic fundamentals are, rather than how the election is. And again, this is second term, right? We don't know how people will vote. It's possible that they might vote back the current administration or bring in a new person. But the incumbent power is there. You cannot doubt it. So clearly, the risks of a first-timer and or when we're having a fresh election, and compared to a second-term election, is always lower in the second term.
Gotcha.
So clearly, we think that will bring in about a bit of reduce the kind of worries that people are having. When we also engage a few number of investors, both international investors now, both institutionals and individuals, many of them were clear that despite the fact that it's pre-election year, they are confident. They like the policies that governments have done. They're ambitious, and they like it. And that's why we saw close to $18 billion coming last year.
Yeah.
And more are still expected to come in this year, right? Even though it's a pre-election year. Does it mean that there are no risks at all? Clearly, there are still risks, right? Because again, foreign investors might just want to stay at the edge to observe how things will play out, right? Sometimes there is the way other markets have behaved. They try to just assume that. So there is risk, but it's not as pronounced as the way people are picturing it. So we think FX will remain stable even though it's a pre-election year. We're looking at FX closing the year at around 1,004. That's a modest appreciation from the 1,420 thereabouts that we have at the moment.
Yeah.
So we think that the risk is there, but not as pronounced as people are looking at it.
Fantastic. We're rounding up. You talked about FX, so you've touched on it already. But I guess just to close out, here was FX turnover 59% higher. I think, and then I think you got three more charts on this. Mostly, was it FPIs coming in, parallel market premium, lowest level in recent years. It was such informative stuff. And then what's the last one? I think it's on the sources of inflows of FX coming in into the market, which I think, FPIs played a role. You see that continuing? So
we think that inflows will be healthy.
Yeah.
And one of the things that give us a lot of confidence is the external accounts. Yeah. I didn't mention that. If you look at the current balance of payment trajectory, we think that 2025, we're going to see, when we have the official numbers out, we're going to see current accounts surplus in about $18 billion. And this year, we're going to have it about $70 billion. Why? We're beginning to have new export lines. For the first time in so many years, we're exporting refined products. If you look at addition of gas and refined products, currently they account for close to 40 to 45% of oil-related exports, which means that our high-level dependency on crude is reducing. So we think that this is good. And then when you bring in other parts of the current accounts, right, clearly we think we are going to have strong numbers this year.
Olaolu Boboye, lead economist, fixed income strategist at CardinalStone. Thank you so much for taking the time to take us through a fantastic report that is incredibly illustrating and informative. And look, we have optimistic look to 2026. Thank you so much for joining us.
Thank you for having me.
That's going to do it for the Global Business Report. Do stay tuned to Arise News. For all of us, thank you so much for watching. I'm Roshi Sodiri. Up next is Newsday, so stay tuned.